happy National Home Buyers Month. Welcome back. I'm Marva Morris, your Central Jersey Realtor. It's day 14 and we are diving into Mortgage 101. Now, by now you know about the different loan programs. That's from day 7, but let's demystify some mortgage terms that you are going to hear if you have not heard it already. So we've heard things like fixed versus adjustable rates, loan terms and points, all that great stuff. Now, don't worry, I will keep it simple and straightforward. So the first thing that I want to touch on with you is a fixed rate versus an adjustable rate mortgage. A fixed rate mortgage has the same interest rate for the entire life of the loan. If you lock in a 30-year fixed at say 6%, you'll pay 6% interest every year and your principal and interest payment won't change. Now, this is great for stability and budgeting. Most first-time home buyers go with a fixed rate because this gives you peace of mind. Namaste, right? An adjustable rate mortgage, which is called an ARM, has an interest rate that can change or adjust after an initial fixed period. So you'll see them described as a 5-1 ARM or a 7-1 ARM. And what that means is the rate is fixed for the first 5 or 7 years. Then it can adjust manually. Now, ARMs are often start with a lower rate, much lower than a fixed loan, which can make your initial payments lower. But after that fixed period, the rate can go up or down based on the market. And it usually has caps on how much it can go up in a given year. So you don't have to worry about that, right? ARMs also can make sense if you know you might sell or refinance before the adjustable period ends. So that's why, some people would do that. But they do carry more risk if the rates rise. So for first timers planning to stay long term, fixed is usually your safer bet. Now let's talk about the loan term, 30 years versus a 15-year or any other options. So the 30-year mortgage is the most common. That's where you spread the payments over 30 years, which makes your monthly payments lower, and that does help with affordability. Now the trade-off is that you pay more interest over the life of the loan, and you also build equity a bit slower because the interest is what you're paying off for the first few years. But that's okay because most people choose a 30-year fixed to get the lowest payment. Now we have your 15-year mortgage. You pay that off in half the time. The monthly payments are usually higher, obviously, because you're paying the same amount off, but you're paying it off faster than if you had a 30-year. But you'll significantly pay less interest overall and build equity quicker, which is great, right? If you can afford the higher payment, it is a great option. But many first-time buyers stick to the 30-year, and maybe you can refinance it in couple years to make it a 15-year when your incomes are a little higher. Now, there are also 20, 25 years loans, but those are less common. You don't see those a lot. Now, some lenders I hear even offer a 40-year loan to give you even lower payments, but that's relatively rare and it's a specialty product. And I have yet to see one, so it's a myth. It's a unicorn. So mortgage points. Now this is like a discount. This is a fancy term for buying down your interest rate by paying more money up front. So 1 point equals 1% of the loan amount paid at closing. So example would be there's a $300,000 loan, 1 point is $3,000. In exchange, a lender reduces your interest rate. Now how much the rate drops per point will vary. But you could say go from a 6% to a 5.75% by paying down a point. Now, should you do it? It depends. If you have extra cash and plan to stay in a home for a long time, go for it. A lower rate can save a lot of money over time. Now, if you are cash tight or you might move in a few years, paying points might not be worth it for you. So save your money. Us, and your lender can calculate the break-even point. Often, if you recoup the cost of interest within the first approximately 5 years, and you'll be there longer than that, it might be worth considering. So just kind of think about that. Then we talk about locking your rate. Now, when you're approved for a loan, you'll have the chance to lock in your interest rate. Often it's going to be for 30 to 60 days, around the time when you're scheduled to close. Now, rates can fluctuate daily. In the current market, rates have been on a bit of a roller coaster, not too wild, a nice kiddie roller coaster. Now, if you like where the rate is, locking it in protects you if the rates go higher. Now, if the rates fall, there's sometimes some float down options that the lender will give you, but that's going to be lender specific. So you're going to have to talk to your lender about that. Now, a New Jersey note. New Jersey doesn't have special mortgage types beyond what I just explained to you. But one thing to remember in New Jersey, our property taxes are high, as we'll discuss on day 17. Now, higher taxes can impact how much home you can afford because taxes are usually included in your monthly payment, and usually you have to escrow them. So when you're choosing a 30 versus 15 year or deciding that a higher priced home, you gotta factor in the tax and the insurance piece too. Now, a good lender will include that in their estimates. Now, I know this is a lot of jargon, right? But you don't have to memorize it. That's what your lender and I are here for. We're going to explain and advise. The key is to choose a mortgage that fits your budget and your comfort level. For most people, that's going to be a fixed rate with a longer term for stability. Now, if you have questions like, should I do a 30-year or a 15-year loan, or is an ARM too risky for me? I am happy to talk it through with you. Just call or text me at 609-468-6324. I can also connect you with a mortgage pro who's going to present your options in plain English. And also, reach out to me for a free complimentary copy of my book on home buying. All right, you mortgage wizards. Next up on day 15, we tackle an often surprising part of buying, the closing costs and how you handle them. Once again, I am Marva Morris. I am your Central Jersey Realtor, and I will be moving you forward. Happy National Home Buyers Month. Have an awesome day.